Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Jeff Kilburg, CEO of KKM Financial, for an update on the markets. I know Jeff's definitely going to want to talk about the action that we've seen in the 10-year. And Jeff, it's been a minute since we've seen you. Certainly October played out as you would expect it to based on historical trade. Volatility came back into the market for us.
It sure did, Jill. And after a rough August, September, and then October, we are welcoming November. November is off to a great start. And look at today. We've talked about this, and actually we talked about this back in October. We were waiting for the yields to relent. It was max yield. You saw everyone across Wall Street, even Bill Ackman was hopping on that trade. It got a little crowded. The 10-year went up over 5%, and then it relented. And it was kind of fortified where the whole reason I was actually looking for the yield to come back under 4.5% because I just didn't believe the Fed. So much of the market was moving higher, especially on the long end of the curve, which fortified the fact that maybe the Fed does do one more interest rate. And we kind of realized with the data was coming in that they weren't going to do it. That seemingly was expressed in the wake of the FOMC meeting this week. And you saw yields relent, went down to 4.48% in the 10-year today. And look at the market, but look at the Russell 2000 today, Jill.
Mm-hmm. Yeah, which is so interesting because I feel like small caps have not participated in any sort of rally that we've seen. So it almost feels like the perfect storm in a good way here, right? We're seeing FOMC policy start to play out. We're seeing the data reflect that. Small caps are participating. Certainly, to your point, rates, it feels like everything is kind of coming together, and we haven't seen this kind of performance since October 2022.
Well, we need more than one day to really kind of, get too excited about the small caps. To your point, since last October of 2022, the S&P was up about 24%, where you saw the Russell 2000 flat. So to see up 3% today when the market's moving up over 1.5%, that is a relief. And it's talking about that broader participation. So I think we always look for bond market leadership. You know, I cut my teeth in the 30-year bond pit in Chicago. So I always look at that and maybe a little biased too much, but it has provided that beacon, that light to understand what's the risk appetite. So now as we're going into the end of the year, the end of the quarter, I think you're going to see some people that were left on the sidelines, some of the underinvested. You're seeing the VIX come down. You may see this line up and chase a little bit higher back to that 4,600 level, which we came from over the summer.
Right. And Jeff, you and I have been talking about this all year. There seemed to be this narrative that the equity and bond markets were saying two very different things, and it didn't make sense. And to your point, one day is not a market make, right? But it feels as if things are a little bit more aligned. We saw it with the jobs data this morning, uptick to 3.9%. We actually saw hourly wages come in 0.1% lower. So we're starting to, see in some of the data that there's expectations for a potential rate cut in the back half of 2024. And that's essentially what we've been saying. We did not expect anything for 2023 because it does take time, 12 to 18 months, to at least start to see some of the Fed's strategy and its efforts play out.
Well, you're spot on, Jill, and that's the anxiety. That's the emotion that's been in the tape all year of 2023. We've tried to understand, will the Fed have a soft landing? And all of a sudden, in the summer, we realized they were going to have a soft landing. Then all of a sudden, emotions got high when we talked about some of the geopolitical tensions as of late. Is there a recession near? Are earnings slowing down? So all these different headwinds have been kind of sidestepped, and you're seeing the market move higher. Now, nothing is linear. I'm not saying we're going back straight up, but it is nice to see that earnings are better than expected. It's a little bifurcated, but nonetheless, we are seeing some earnings better than expected. And I think the market can heal when you see that 10-year. If it stays under 4.5%, if it even works its way down to 4%, I'm looking for it to stay kind of tethered to 4.5% for the rest of the year. But that will allow not just the Russell 2000, not just the S&P, not just the Nasdaq 100, but all these stocks to kind of regain some footing, which is a positive outcome for the rest of 2023, but also as we look into 2024.
Right. And of course, Jeff, we have seasonality on our side, right? I mean,
yes.
Again, this is historical, doesn't mean that it's necessarily going to play out in November or December, but you alluded to a great point here. There's not just 7 to 10 stocks that we need to pay attention to. There are other stocks in the market that do matter, but I think the market is also treating earnings results right this quarter. You beat, fine. If you are not guiding and guiding well, you are definitely not getting rewarded for it. Let's put it that way. Strong beat, strong guidance, then you will see rewards in your stock price. And we haven't seen that in some time. I feel like the market is treating corporate earnings and results right this time.
Well, I think we come back down to earth a little bit. We got so excited in Q1, Q2. You said AI in your earnings report, even if you were Kellogg, if you just said the two letters AI, it seems like your stock went up. So now all of a sudden we become a little more conditioned, a little more realistic about what the AI expectation is in the tech side of it. And that's kind of helped us understand and recalibrate a bit on the Magnificent Seven, which you talked about, the tech darlings, which have certainly provided leadership. But remember, last year in 2022, they were providing leadership to the downside when you saw the Nasdaq 100 oversold conditions down nearly 35%.
All right, Jeff, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.